Let's get to Tony Smurfit, who is the CEO of Smurfit Kappa and joins us now. Tony, good morning to you.
Good morning, Steve.
Look, why don't I draw attention to that 7% revenue growth figure as well? Because we are seeing underwhelming growth at a whole host of European companies at their European operations. Is that an organic figure as well? Just so I can put it in context as well. And how do you view the European business? Good morning, sir.
Good morning. Good morning. It is an underlying growth figure. It's organic growth. It's building on a lot of the things that we've been doing over the last 18 months or so in the recovery of our input costs. And so it is the business itself that is making those figures grow. We have a lot of initiatives, Steve, as you know, through the development of plastic, the development of paper-based packaging against plastics, and so that's really working in our favour. E-commerce is working in our favour, and in general, I think we're doing very well.
Why am I hearing CEO after CEO, chairman after chairman concerned about European performance at the moment? What is it that they're seeing that you may be seeing but you feel slightly immune to?
Well, as I say, I mean, about 75% of our business is in FMCG goods. So people got to eat, whether they eat by buying at Tesco or by buying at Aldi. They're still eating, so therefore we're going to see growth in our packaging anyway. I think if you actually look at what is happening with regard to the economies in general, you're seeing a lot of slowdown in the big industrial businesses, and we saw that in the second half of the year, and we're not immune to that. So our growth in the first half was about 3%, between 2.5% and 3%. It's more like 1 to 2% in the second half of the year.
Tony, you're not seeing a big difference in the growth rate, the underlying growth rate in Europe, 7% versus the so-called fast-growing markets in the Americas, Mexico and Colombia, where you've got growth of 8%. Why is that EM market not growing as fast as it could?
Well, it depends on the country. We amalgamate our countries, so therefore if you take our Argentinian market was much slower, but then our Colombian market was much higher. So it depends on the market. So it's an amalgamation that showed 7 or 8% or 8% in the Americas.
And Venezuela was stripped out of the numbers, I gather, because you had problems with the government. Do you want to get into that as you deconsolidated the numbers from that country?
Yeah, unfortunately, in September, the government came in and effectively took control of our business and put 4 of our managers into jail. So therefore, we had to get out of the country, and then they took over our business, and obviously, we're seeking recompense for that.
So obviously there was a complete surprise to you. Conditions
well,
on the ground,
I mean, conditions in Venezuela
quickly.
have been very, very difficult for a long period of time. We've been keeping going because we've been exporting to our own operations, and that's allowed us to continue. But when they came and took over our operations, that we couldn't continue, so we had to extract our management.
Just back to something that always interests me, is raw materials prices. And last year, I think we talked a lot with you about some of the trends that were higher, which may have had an impact on margin. Improvement on margin quarter on quarter here. Could you talk about raw material costs for 2019 and whether you can do quite a bit better on that current margin line?
Jeff, I think I wouldn't say that we can do better on the margin line. I think what we saw last year was the reversal of a trend from the previous year of waste paper that went up in 2017 and reversed down to 2018. It went down, and that was a big positive for us. We see a continuation of that trend, which is staying low in our to the Chinese market at the moment, so we don't see a change in that.
And the currency effects was something else that we talked a lot about, I think, for the third quarter. How are things with regard to currencies?
Currencies hit us for about 50 million last year. We don't really try and predict currencies, but so far, generally speaking, a strong dollar is good for our business, and the dollar's pretty strong at the moment.
And I've got to ask you a Brexit question since we're still in the midst of this. Any change for you in terms of business planning based on the continuing evolution of the discussion around the
We have slowed up
border?
our investments in the UK. We have put on hold a number of pretty substantial investments here until such time we get some clarity. We're obviously very worried about it. We see the business itself slowing down here, which is worrying for us, but we're hoping that's temporary. As I say, most of our business goes into FMCG goods anyway. So, as I say, people are going to eat. We'll see what happens, but we are worried about it.
And the government has been trying to reach out to the business community. Are you hearing anything from Theresa May and the government that is giving you more confidence about the support that you'll get after Brexit?
What we're really hoping for is not a hard Brexit. I mean, obviously, she has reached out to business on a continual basis to say that she does not want that either. We have to take her at her word. If there is a hard Brexit, I think that's going to be extremely damaging for us and for all of business. And hopefully it won't happen. I still believe there are some adults in the room that are going to take over.
Just a quick question on corporate debt at the moment as well. I mean, I'm just reading through your capital structure and ongoing credit strategy, further extending maturity profiles. That makes a lot of sense. I suppose a very flat curve at the moment as well. Everything looks tickety-boo there as well. But do you see any strains in the corporate debt market as well? We had one story earlier that apparently spooked the market about in the banking sector, a call option not being taken up to eliminate some options. Do you see any strains in the corporate debt market at all?
Not for us, Steve. We just last week did 1.35 billion rollover into revolving credit, and we raised 400 million in the bond market. So we have not seen it ourselves, because generally speaking we're seen as a very good credit.
At a yield of 2.75% on medium term, that's 7-year debt roughly.
Yes.
That's not bad these days, is it?
No, we're very happy with it. I mean, the company is very well positioned. Our debt to EBITDA is down at 2 times, which is the lowest in our history.
Tony, thank you very much for joining us this morning. Always good to see you in
Good to see
person.
you.
Tony Smurfit with our CEO of Smurfit Kappa.